Hello, welcome to my channel today. This is the King's Tutor. The first time of joining us, thank you for clicking to this. Ensure you like, comment, share, and subscribe to our channel. And a returning subscriber, thank you for your support. Now, today we want to see the trial balance. Okay. Now, what is trial balance? Now, we've seen the double entry principle that states that for every debit entry, there must be a corresponding credit entry and vice versa. Okay, now what does that mean? It means that in a single transaction, two accounts is affected. An account is debited while another is what? Credited. So if an accountant or anyone or a bookkeeper that prepares what? A ledger post all this item as it is supposed to be, it means that in one transaction you have two accounts. One account is supposed to be debited and another is supposed to be credited. So at the end of it, we are supposed to have the same total. Okay, we're supposed to have a total that will give us a particular amount as debit and another total that will give us the same amount as what? Credit, if no errors are being made. Okay, so trial balance is a list or a schedule of debit and credit balances extracted from the ledger to show the arithmetic accuracy of the ledger. Okay, so trial balance is what? A list of what? Debit and credit balances extracted from the what? From the ledger to ensure or show a proof of the accuracy, arithmetic accuracy of what? The ledger. Okay, so that is what trial balance does. It means that when we are done posting and balancing in the ledger account, the totals there is posted to what? This account. So once we post it to the account at the debit and credit side, and if it balances automatically, it means that the posting that was done in the ledger is what? Correct. Okay, so now we want to see the uses. Let's see the uses of trial balance. The uses of trial balance. Now, the first reason why we use trial balance is to test the arithmetic accuracy. To test the arithmetic accuracy of the ledgers. Okay, that is one of its what uses to test the what? Arithmetic accuracy of what? The ledger. Okay, while the second use is to prepare the financial statement. Okay, and the use of trial balance is to what? It is used to prepare the what? The financial what? Statement, because it is from there that we definitely what? Pull it out to start preparing the what? The trading profit or loss account, which is known as what? Statement of comprehensive income, and what? The balance what? Sheet. Okay, and other what? Accounting what? Book. So the trial balance is used to test the arithmetic accuracy of the ledger and also to prepare the what? The financial statement. Now, I want to bring your indulgence that now if at the preparation of the trial balance, the total must be the same. If the totals of the debit and credit balances, if the totals are not the same, it means there was what? An error. Okay, but that does not mean that even if it balances, that there is no error. There are some errors that are silent, that do not touch the what? The arithmetic accuracy, but they are what? They touch in terms of what? Either the class of account or some principles. We're going to see that. Okay, that even if there are totals in the trial balance, even in the balances, definitely there are some errors that might be there. We'll see that in what? In a later video. Okay, now one may ask, how do we prepare this trial balance? Is there a rule guiding the preparation of the trial balance? Yes, there's a rule guiding the preparation of trial balance. Okay, now the rule is the rules guiding trial balance. The rule is debit all assets. You debit all assets. 2, you credit all liabilities. 3, you credit all income. And 4, you debit all expenses. So every transaction must fall into either being an asset, a liability, an income, or and expenses. Okay, so in order for us not to, because most time, even if we give a format here, there are some items that might not be in the format, but you might see it in some question. But once you have these rules offhand, it will help and guide you that whatsoever transaction you see, you just have to identify if it falls either in the class of an asset, a liability, income, or an expenses. Okay, so in the preparation of the trial balance, you debit all the assets, either current asset or fixed asset or tangible or non-tangible asset. You debit it. You credit all liabilities, either what long-term liability or short-term liability. You credit it. You credit all what income, and you debit all what expenses. Okay, that's the rule guiding the trial balance. Okay, now we are going to see the format. We're going to see the format using this rule. Okay, the format guiding trial balance. So, if we say the format of the trial balance, how does it look like? We have the particulars, we have the debit and the credit. Okay, now remember, look at the rule. We say we debit assets, we credit liabilities, you credit income, and you debit expenses. Okay, and that's the rule. So we'll have the capital, the purchases, the plant and machinery as fixed assets, the fixture and fittings, the premises, the sales as an income, rent and rates, wages and salaries, debtors, creditors, return inwards, return outwards, discount allowed, discount received, carriage inward, carriage outward, bad debt. Okay, so we can have the total. Okay, so like what I said before, I said we might have, in terms of a specified question, some items that might not be here, but this rule should guide you. Okay, so you see that every item on the debit must either be an asset or an expenses. Okay, so it must either be an asset or expenses, every item on the debit, while every item on the credit must either be what, a liability or what, an income. Okay, a liability what or an income. So that is the format of the trial balance. Okay, like I said, now for you to start preparing your financial statement, either the trading profit or loss account, you must ensure that these two totals are the same. That is what I'm trying to say. That because all these total are extracted from the ledger. Okay, the balance is from the ledger. Like we said before, for every debit entry there's a corresponding credit entry. So once we're done with the ledger, normally we're supposed to have the same total. So the total of the capital, we brought it here, purchases is brought here, plant and machinery. Okay, we brought it there. So once we put it together, we're supposed to have the same total. Okay, that is proving arithmetic accuracy of the ledger. Okay, so once it is like this now, it means that the ledger is accurate. Now, the ledger being accurate as having our total to be the same does not mean that it is void of error. I said before, does not mean that it is void of error. It's just that the error that might have been committed, even when these totals are the same, are errors that do not affect the trial balance. Okay, they are called errors not affecting the trial balance. We're going to see that in another video on how to solve. And also we have another one in which once you are done recording it, debit and credit side, they do not balance. At this point in time, it affects the trial balance. You cannot proceed from this point if these two are not the same. You can't use it to prepare any financial statement because it will not end up balancing. Okay, so this is the format. Now let me show you some errors that might affect that might not affect the trial balance, and those that might affect the trial balance. Now the first one said errors that do not affect number one, we call it error of omission. Error of omission. Now what it means is that an item is completely omitted from both the debit and the credit side. Okay, now when it happens, it will not affect it. Okay, it will not affect this error of omission. It means an item is not recorded at all. Okay, so the next one, error of commission. The error of commission is when an item is posted to another's account. Okay, at this point, it is still the same principle. What to debit was debited, what to credit was credited, or it was posted to another person's account. Okay, for instance, we wanted to debit Ayos account and we debited Ade's account. It is still the same principle, but it's an error because it was not the actual person. Okay, now these are errors that do not affect. Now the third one, error of principle. Now this is when an error is an item is put to a wrong class of account. Okay, still the same process but to a wrong class of account. For instance, an item of real account was debited instead of an item of a nominal account. For instance, we want to debit a motor van account, but we'll end up debiting motor expenses. It's still the same principle that was done, but into the wrong class of account. Okay, and the next one is complete reversal of entry. When there's complete reversal of entry, that is what was supposed to be debited was credited, and what was supposed to be credited was debited. You twist it, but it still follows the same way. For instance, if you said sold goods for cash 500, the normal double entry should be you debit cash book and you credit sales account because the cash is coming in, the credit sales account. But complete reversal error is that you credited cash and you debited sales. You see, it's an error as per it was not what was debited was credited, but it did not stop at that way at one-sided. It completed the entry. Okay, it's completed the entry, but it's an error because you're supposed to debit cash book and credit sales. but you credit cash book and you debited what sales, but it also what completes the double entry principle, so it does not affect this. Okay, so the fifth one, error of original entry. Now the error of original entry is when a wrong amount is entered on both the debit and credit side. Okay, when you enter a wrong amount, for instance, you want to enter capital. Okay, this sold goods for cash 500. Instead of recording 500, you recorded it in a normal way, but you recorded 5,000. Instead of writing 500, you wrote 5,000 for both debit and credit. It will still balance. Okay, but it's not the original entry, the original amount. Okay, while the sixth one, call it compensating error. That is when error cancels out each other. Compensating error occurs when an error that is made on the debit side, that same amount of error was also made at the credit side. That means if there was an understatement of amount, understating an amount in the debit side, it was also done on the credit side. Okay, that is what compensating error. The errors will cancel out each other, but it is an error. That is, for instance, in the debit side, recorded 501 as understatement. Okay, and also in the credit side, the same error was made. Okay, so these are some of the errors that would not affect this total, but it is an error, but it will not affect the total. At this point in time, you might not detect it as at when preparing this. It might not be detected because we check once you are preparing the trial balance. We check at the total to see if it was it. Both of them correspond. Okay, and also there are some errors that will affect this. It means that these two will not be the same. Okay, and one of it is that is errors that will affect. So one of it is that is errors that will affect. Errors affecting. Okay, now the first one is what we call one-sided omission. One-sided omission. One-sided omission is different from error of omission. And one-sided omission means that a particular side was not recorded while the other part was recorded. For instance, they said sold goods for cash 500. We recorded cash at the debit side 500, but did not record for sales. That is one-sided. You recorded the normal way for one part, but you did not record the other. It will affect this because it will not balance. It does not complete the double entry rule. Okay? While the other one, an item misposted. The second one is when an item is misposted to an account. For instance, if they say sold goods for cash is 500, okay? Sold goods for cash 500. Now at the debit side of the cash, you wrote 500 normally. Then at the credit side, you recorded 5,000. It will affect it, okay? You follow the principle, but the amount are not the same. Since the amount are not the same, definitely it will affect the total of the trial balance, okay? And the third one, when two entries are recorded on the same side of the account. When two entries are recorded on the same side of the account. For instance, in this same sold goods for cash, I want to use this example for all. Sold goods for cash, you debited cash book of 500 and you debited it again 500 instead of crediting the sales. It means you debited the cash book twice and did not record anything for the sales. It will definitely affect the trial balance total. Okay, that's the third one. Now the fourth one also, when the total of the trial balance is incorrectly totaled. For instance, every item was done a normal way, but once you are recording this now, instead of 10,000, instead of 10,500, you wrote 10,500 here, and what you wrote here is 10,050. When it's incorrectly total, it will cause an error. Okay, so these are some of the errors. Though we'll see error affecting the trial balance and not affecting, we'll see errors on a different video. Okay, so that is the trial balance. Now we're going to see another video on how to start from scratch the ledger to prepare the trial balance to post all this. We'll start from scratch, the ledger, we'll balance it, then take it to what trial balance, how to do that, and also prepare trading profit dollars account and balance sheet. Okay, thank you for joining, and ensure you like, comment, share this video. If you have any question, drop it in the comment section below. Okay, we're on different platforms. Okay, we're on Facebook, Instagram, TikTok, and on YouTube. Okay, now I want to recommend a video for you that will help you as regards this, because once you move from trial balance in the statement of profits or loss account, now you see this video, watch it to help you. Thank you very much.